Welcome to Macro Crest, where we focus on fundamentals for direction and technicals for our entries. And last week was a very, should I say, terrible week. Yeah, we had our losses based on the dollar, but that's all right. This the week is the month, the year is just starting. The month is also just starting. We had inflation data from Aussie. It came out week. Um, it was negative for the Aussie, but that doesn't actually mean that it's entirely very bad. We're still above 3%. So the labor data that came out from CAT was weak. Kind Yeah, it was weak. It was weak. We had the average labor data from dollar solid. So we are bullish on the dollar just because of this. And the funny part is that next week, just into next week, um on Tuesday, we will be having the inflation data, the CPI, very important. Now, if we look at our outlook for the dollar, note the Fed has two mandates. It's a dual mandate: the labor and inflation, bringing inflation down and making people get employment. That's the job of the Fed Reserve, right? But they also said that if the data comes out less than 50K consecutively, or substantially, they will definitely look at cutting interest rates. But now, currently, they are solid, so the market is repricing this. So they are not going to cut interest rates. They are tactically bullish. The only reason why they are not going to be bullish anymore is due to the fact that inflation data that's coming up on the 18th comes in less than 2.5%. But the market is already pricing in 2.7%. So if it's 2.7%, it means what we will do is that we'll be looking at the bullish dollar until this fails us, right? Um, Going to the Dixie, this is what we have on the Dixie. So I'm assuming that we are bearish. I'm still bearish on the Dixie, right? But where are we bearish from? And where are we bearish to? So I'm looking at this as liquidity. So we might take this, and then we start dropping. Now, if CPI is bad, but we might long here if the CPI is good all the way, then it means that this point is definitely liquidity. So we might see price head up to this point, take everything out before we might start looking for full-time longs. So last year, yes, the dollar was weak, and throughout last year, as we can see, this is from January. It's been weak all the way till July, August, and September. It's been ranging, pushing to the upside, coming to the downside. Now it has broken structure, yes, but let's see if we are bullish on the dollar. That I have a few pairs I'm going to be bullish on, which is the USD JPY. As we can see, I'm still bullish on it. We have the USD card, which I'm bullish on it from this demand, and also the NZD USD. Yes, so we're looking at this supply here to start shorting. But if I'm bearish on the Dixie, I'm bullish on Aussie USD. So this is what we would have for the Aussie USD, and I'll be looking at longing it from this point and this other demand. This demand. So I'll be longing at those 2 points. The yen, Aussie yen is massive. I'm still bullish on Aussie. So this will be longs from this possibly H4 demand. And then from there we have the weakness in the GBP AUD. So I'm looking at shorting from above here. There is no rush to it. I'm looking at shorting this from above here, but I'm not too bothered about that. I don't really have much to look at in the market because everything is just the same way as it was. Gold and silver, I'm still bullish on them. We have Venezuela political issues with the US. We have the Greenland issue. We have the euro now looking at calling back Russia to have some form of agreement. We still Ukraine Russia issues. We still have Iran crisis protests. So everything there is all this. When we all have all this, is going to be solid for gold. So let's have a safe trading week.